On Monday, Chinese stocks recovered from an earlier slip to finish the trading day higher following the release of GDP data that showed the Chinese economy growing at its slowest pace in at least 27 years. From April to June, China's economy grew 6.2% from a year ago, in line with expectations. Meanwhile, retail sales boomed by 9.8% year-on-year in June, from 8.6% year-on-year, and industrial output grew 6.3% from a year earlier, picking up from May's 17-year low and handily beating market expectations. The Shanghai Composite added 0.4% to 2,942.19. Hong Kong's Hang Seng Index added 0.22%. South Korea's Kospi ended the trading day in Seoul 0.2% lower at 2,000.82.48. Over in Australia, the S&P ASX 200 declined 0.65% to close at 6,653.00 as most sectors slipped. European stocks returned to positive territory Monday afternoon after a choppy session. The Pan-European Stock 600 rebounded from earlier losses to trade provisionally 0.48% higher by the close. In geopolitics, tensions continued to rumble on in the background. Iranian leader Hassan Rouhani said Sunday that the country was ready to hold talks with the United States on the conditions that Washington drops sanctions and returns to the 2015 nuclear deal. Meanwhile, in the backdrop to simmering trade tensions, China's foreign ministry spokesman has threatened to ban any U.S. firm involved in selling arms to Taiwan from doing business in China. On the data front, Italy's business outlook improved more sharply than that of any other country in the 4 months to June. U.S. stocks rose to notch a fresh record close on Monday, but the gains were muted as Wall Street remained cautious to start off the corporate earnings season. The Dow Jones Industrial Average closed 26.13 points higher, or 0.1%, at 27,359.16. The S&P 500 ended the day just above the flat line at 3,014.30. The Nasdaq Composite advanced 0.2% to 8,258.19. The major indexes also posted intraday all-time highs earlier in the session. Citigroup kicked off the earnings season by reporting second quarter numbers that topped analyst expectations. Gains from the initial public offering of TradeWeb, an electronic bond trading platform, drove the bank's results past Wall Street's estimates. Citigroup shares traded higher in the pre-market after the results were released, but quickly fell after the open to close, less than 0.1% lower. Other big banks like JP Morgan, Chase, Morgan Stanley, Bank of America, and Goldman Sachs are expected to report quarterly earnings later this week. The outlook for this earnings season is bleak. Analysts expect S&P 500 earnings to have fallen by 3% in the second quarter. In the currency markets, the dollar turned positive in the second half of the day, with European currencies finishing in the red. Euro-USD failed to challenge the 1.13 handle once again and has settled close to the 100 DMA around 1.1250. JBP-USD struggled below 1.26 and registered daily lows marginally above 1.25. In commodities, oil prices settled lower Monday, giving back a portion of last week's sizable gains, as production in the Gulf of Mexico began a post-storm recovery. Both contracts last week made their biggest weekly gains in 3 weeks as U.S. oil inventories fell and diplomatic tensions rose in the Middle East. However, as producers on Monday began restoring some of the nearly 74% of output that was shut at U.S. Gulf of Mexico platforms ahead of Hurricane Barry, concerns about oversupplies returned to the fore. Workers also were returning to the more than 280 production platforms that had been evacuated. It can take several days for full production to be resumed after a storm leaves the Gulf of Mexico. Chinese data showed industrial output and retail data beat expectations, but overall figures showed the country's slowest quarterly economic growth in decades, which also capped the optimism. As a result, Brent got back below the 200 DMA and received support around $66 after another failed attempt to confirm a break above $67. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.